There we go. All right. Fundamental analysis. Right. Fundamental analysis. This is the educational section of the webinar. So I tried to integrate this as much as I can. I am having to do the slides up to keep it up to date and to help you guys tweak it to what you guys should know. This is part of my big course. So I used to run courses in person and online. In-person courses would take 2 days, right? 2 days just to get through the information, and then a whole month of coaching, webinars, and in-person and online coaching, reviewing trades, understanding your psychology, understanding why you got into a trade, why you closed out a trade. So that was a whole program that I developed, and sold it for thousands of dollars. So you guys are getting this free, all right? Absolutely free. All you have to do, click that like and subscribe button. So fundamental analysis, what we're looking at is I will be sharing with you a watch list, right? Oops. The watch list, things that I watch. Okay, it's not the list to pay attention to, but this is what I watch and why I watch it. Okay, and then the theme, right? A lot of people just go, oh, I need to know all this different news. They forget about the theme of the market. So I'll tell you about the theme of that, and then briefly on how to do the trade or how to trade the fundamental analysis or the news event. Okay, we've already done the disclaimer, so that's done. All right. All right, I'm sure you all know the economic calendar, forexfactory.com. What I always suggest to you all is that, it's there. This is the first thing that I have open on my computer every day. Just helps me plan out my day, right? Just helps me plan out my day in terms of time, in terms of when I want to get into a trade or whether I have other things to do. Because if I know that a news is going to be released, I won't get into a trade, right? A relevant news. For example, tomorrow at 2:30, will I get into a pound trade? No, I wouldn't, because I know at 3:30 there's a pound news to be released, right? So it just helps you with your planning. It helps you understand whether there's a sudden shock that could be coming. Okay, so economic calendar, please use it. Even if you don't understand anything about it, you use it just to highlight to you where the danger is, right? It's important to know where the danger is. So you use it just to highlight to you where the danger is. Okay, at any point in time, if you have questions, please feel free to ask. In the economic calendar in Forex Factory, in the data, and I've shown you this so many times already, they show you the previous, they show you the forecast, and they show you the actual when it's being released, right? They show you the previous, the forecasted number, and the actual. So there is the whole description here, right? If the actual data is better than the forecasted, the currency should strengthen, price should increase. If the actual data is equal to that, then we're going to have some fluctuation, possibly nothing much at all. Actual, then better than previous, then the currency is going to strengthen, right? Price increase. And then in the worst case scenario, you have actual not matching or mixing with the forecasted and the previous data. Then you're going to see, if it aligns, you're going to see the big strong move. If it doesn't, then you're going to see some brief move and then a quick retracement again. Okay, so what I would like always to say is, to think about it, right? A lot of times when we look at economics, everyone gets confused, they get worried. Think about it as this is your current pay, right? This is your current pay. If you're promised an increase, a big increase, and you actually only get a small increase, would you be happy, right? How happy would you be would mean how much the price is going to go up by. If you get a big increase and you got a super big increase, then you're going to be super happy. Price is going to move strongly to the upside. So you don't have to think about it as economics, as percentages and numbers. You can just relate it back to some other data, possibly making it easier to understand. Okay, but this is straightforward. What I want to share with you is the range of economic data releases, right? The range of economic data releases, how I look at it, right? How I look at it. This is all. If you're gonna take a screenshot, I don't think I can post this up, but if you're gonna take a screenshot, do that. Don't share it around. Although this is going up online, but yeah. First off, we have the household data, right? We have the household data. Then we have businesses. Then we have banks. Then we have government, and then we have central bank. Right? As we all know that household data can come in the form of retail sales, employment, consumer sentiment, unemployment rates, non-farm payrolls, a whole bunch of information. So a lot of information in terms of households. Then businesses is more the PMI, right? PMI and business sentiment. Then banks comes down to building permits, right? I'll tell you more about that next time. Government is GDP, and then central bank is really inflation, interest rates, and monetary policy. Okay? Looking at it this way, just a number of information flowing through. Which one do you think is going to have the most impact? Which one do you think is going to have the most impact? Mail reminder is good, yeah. Hey Tommy, how are you doing? Anyone going to tell me which one do you think has the most impact? Central bank. Thanks, Wayne. Okay, so yes, the central bank. How I prioritize it or how I put it in a hierarchy, I look at it as households, businesses, banks, government, and central bank. I rank it this way, right? These are the 7 news items that I pay attention to. If you read my analysis on TradingView frequently, you'll notice that I do ignore a lot of other news events, and I mostly focus on this 7. Firstly, monetary policy in terms of interest rates and the statements. They always come together. QE or now even QT. Okay, QE is quantitative easing. Sure thing, M leader. No worries. QE is quantitative easing. QT is quantitative tightening. Easing is when they were pushing money into the markets. Tightening is when now they're buying it back to reduce supply. CPI, Consumer Price Index. Gross Domestic Product, the GDP on the government side. Banks, we're looking at building permits. If you don't know anything about that, I will tell you more next time. PMI for businesses, and then households, employment data, and consumer sentiment. Okay, so that's how I rank it in terms of the impact it's going to have. In terms of the impact it's going to have. Okay, then we come down to the theme, right? So if you're always looking at these 7, it's going to simplify news a lot already. Now I can tell you that there's a whole bunch of news on Forex Factory, construction output, goods trade balance, NIESR, GDP, household spending, manufacturing sales, all that. There's a lot of bond action, right? There's a lot of information there, and it's going to get confusing. That's the reason why I filtered it down to this 7. But you don't even have to focus on this 7 all the time, right? The mistake a lot of people do is, 1, they try and focus on everything, right? They try and focus on everything, they end up having no trades at all. 2, they come to this point and they focus on all 7, and then they still go like, wait, I'm confused. PMI, recently I've been telling you PMI is there, but I'm not paying much attention to it. Building permits, I have pretty much not paid attention to it for a very long time already. And the PMI as well, right? Why is that so? It's because of the theme of focus. No one thinks about the theme of focus, right? What's important right now? What's going to change the way economics, or what's going to change what they're focusing on, right? What's going to change prices the most at this point in time? So in 2008 and 2009, we had the global financial crisis, the GFC, right? The GFC. That's possibly when that's when I started doing FX. So I was always doing equities before global financial crisis hit, and then I started trading in FX as well. During that time, global financial crisis, people were losing jobs left, right, center. Banks were closing down, going insolvent. Businesses were going out of business. Debt was sky high. Focus was on employment and wage growth. How many more people are working, or how many more people are losing their jobs? If they are working, are they getting more money, or are they getting less than before? Right? So back then, big focus was on employment. Whenever a non-farm payroll number came out, we saw big volatility on the dollar and right across the board. A bit less so now, unless we get crazy numbers like 500 last month. Then 2020 to 2021, we had COVID. Right? We had COVID and markets closed down, economies closed, people couldn't travel, there were businesses slowed down, everything was on shutdown or slowdown mode. The focus came to GDP, right? It is the country producing, right? It's the country producing. So the GDP comes into play. You're not so much focused on employment because everyone was losing jobs or working from home, right? It was GDP, it was governments pumping more money, it was the QE or stimulus packages pumping money into the market to try and prop up the GDP. Following on from that, now in 2022, 2023, maybe into 24, 25, the focus is on inflation, CPI, and on the interest rates, right? Are we as a globe heading towards recession because of inflation being sky high? And if inflation is sky high, they need to increase interest rates to try and bring it down. So all that focus right now is on inflation and on interest rates. You can see that when a PMI number comes out, it doesn't move prices too much. Apart from a crazy non-farm payroll, employment numbers has a small spike and then a retracement again, either to the upside or downside. No big change in direction. The big change in direction comes from the inflation data and the interest rates. Okay, so it's very important to remember or to consider the theme of the market, not just the news itself. So when we talk about, right now, inflation data, interest rates, how do we all relate it to, just to give you a brief overview of how it works. When inflation is high, what needs to happen? When inflation is high, they need to increase rates to weaken the economy to slow inflation down. Right? When it's high, they need to increase rates to weaken it to slow inflation down. So it's a balance between inflation, GDP, and interest rates. What typically happens when you increase interest rates is you get a stronger currency. How we had it all the way before this period of rate hikes, everyone, ECB was at zero or negative rates. The Bank of Japan is in negative rates. The US was at zero, right? Everyone was at minus rates or cutting rates because back then they were cutting rates, right? They're cutting rates to try and stimulate growth in the economy. There's no reason why you would put money into the bank because you'll be losing money by saving. You might as well go trade, you might as well go invest, you might as well buy businesses. So it's stimulating the economy for growth. And that's why we have this problem that we have now, that massive inflation. Because not only were they cutting rates, they were also pumping money in terms of stimulus, COVID stimulus. Keep pumping money in. We saw big, fast inflation climbing to the upside. Now they need to slow it down. They need to hike rates. Okay, so that's why the theme right now is on inflation and on interest rates. Any questions so far? Alrighty, cool. So, inflation, don't worry about the calculation. I haven't put in the CPI, how to calculate CPI and how to calculate GDP and all that. The main thing you need to know, and why every central bank now is increasing rates, is that the target CPI for any economy, for most economies, is 2 to 3%. Is 2 to 3%. Okay, this question was actually asked last night during Powell's testimony. One of the committee members actually asked him, like, why 2 to 3%? Why have you decided on 2 to 3 and not 5? Right? So what he said was, well, that's actually what the global economy or the global central banks have came through a study to understand that at 2 to 3%, it's a steady rate of growth for an economy, right? A steady rate of growth. Because the question they were asking is like, wait, if you're trying to get it to 2 to 3, you have to increase rates so high, you would have to result in a big unemployment number. Is it worthwhile trying to chase a 2 to 3% number? Why not 5, right? So his answer was, it's a global benchmark where, through studies, they found that the 2 to 3% number is where you're going to see a steady rate of growth in the economy. All right? And then I'll show you here. Look, why I say that is the theme, is the important thing. On the 13th of October last year, right? Last year, US CPI data year on year was released. 8.3, expected 8.1, came out 8.2, right? Worse than before, better than, or higher, not better, higher than expected. What happened? So it's not that one. What happened was we saw this big move to the upside. This big move to the upside on the CPI data. Wouldn't happen on any other pair, on any other news, but the CPI for now, right? Because inflation was growing faster than yet expected. And that's why we saw a big push to the upside on the dollar, because expectation was, right, in October, inflation was at 8.2%. Feds are going to have to increase rates further. Given they have to increase rates further, the currency should strengthen. Landry just asked what's the prediction for NFP tomorrow. I'll do that shortly, all right? Then in November, right, so that was October. In November, 1 month later, we have it going from 8.2, expected 7.9, came out 7.7. That big downward move. Now that big downward move on the CPI. Okay, so that's the impact of the CPI data, and that's the impact of understanding the theme behind the news release, or which news release to pay attention to. All right, so there's interest rates, how they adjust or tweak or tune CPI data is through interest rates decisions. And I'll show you here, it's not just about the interest rates. This is the Aussie dollar. I did a back test on the Aussie dollar. This is on the daily time frame, so you can't really see the move exactly, but these were all the rate hikes. These were all the rate hikes since June on the Aussie. And you can see that although they hiked rates, the Aussie dollar traded lower. Although they hiked rates, it traded lower. Same thing over and over and over and over. This one went up a bit. So this was a bit of an exception here. This one traded down, then went down. This one went down, 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 down. Slight exception here, right? So out of 1, 2, 3, 4, 5, 6, 7, 8, 9 events, only 2 times after a rate hike, we saw price close slightly higher following the news release. So as much as it's the interest rate decision, you also want to see what was the previous trend, right? What was the previous trend? Was it going to the downside? Was it that dollar strength pushing prices? That's why, although they hiked rates, dollar strength was still in play. We saw prices trading lower. So it's not just that one decision on rate hikes or not, or how big it is, but it's also on the previous trend. Okay, so when I talk about previous trend and you start thinking about trend, you think about the impact of your news. Short term change in price depends on existing trend. Employment change, retail sales, PMI. Longer term, you have your GDP, your CPI, and your interest rates decision. So what I mean by short term change in price or short term fluctuation and the medium to long term effect is short term, this will be the news event here. Right, price might be trading to the upside, might be trending up, and then after that the news comes out, oh, bad employment data, for example. You see a brief spike down, and then after that push back up again, continuing on with trend. What could happen during this time, if you don't know about too much about trading the news and trading the events, is that you think, oh wait, I'm ready to sell. Right, you'll be ready to sell. Could be selling right at the bottom. Next moment it goes back up. So just think about the trend, think about your resistance levels, support levels as well. Compared to a big news like inflation, interest rates, and GDP, especially interest rates and inflation, is that whatever the trend is, especially with interest rate decisions, price tends to consolidate. Right? Price trending up, lead up to the news, you see price sit right across. Waiting for the news release. Good news, we're going to see a big spike up to the upside. Bad news, we're going to see that big drop downwards. Could reverse the trend. Okay, so this is just the really snapshot view of understanding how these news events work. How I want you to start planning your trading when it comes to a news event. And that's actually a good question there coming from Landry about the non-farm payrolls. Okay, we'll apply this here. So first thing, think of it. Is it a big or a small news? Right? Let's say, for example, now we think about the NFP. Is it a big or small news? Hey, could be medium, right? Let's say it's small news. So what's the trend? So what you should be doing at this point is looking at all the different currency pairs. What's the dollar doing? It's sitting right across, or it's trending slightly lower. What's the yen doing? Is pushing to the downside, or what's the Aussie doing? Trading up, right? So what's the trend? Where are my support and resistance levels? So for example, if you see the Aussie is gone down, it's rebound back up, right? It's trying to rebound back up now. What are my support resistance levels? You might have a good resistance near term. You might have a support down there, and then your next resistance is possibly way up there. Okay, so what to do in a good news or in a bad news situation? Okay, great. If I were to look to buy this up, it would mean that it's going to be bad news for the US. Right? It'd be bad news for the US to see the Aussie dollar push towards upside. So in a bad news situation, I'll be looking to buy on the Aussie dollar. Right? Say for example, pound has been trading down and then set right across. Right? Trading down, bounced a bit and set right across. We got a near-term resistance. We got a big support down there. What to do if we see a strong non-farm payroll number? We could see the pound dollar trade lower because it's dollar strength. Then in a good non-farm payroll news release, we're going to look to sell the pound dollar. All right. And then what am I going to ignore? I'm going to ignore the US CAD because there is their own employment numbers to be released. Putting that, you have that table there, you know what to pay attention to at 9:30 when it's being released. You're not going to scroll through all the different charts. You'll be like, okay, good news scenario. I have my Aussie, I have my Kiwi, I have my Euro, for example. Right? Then you know which pairs to watch, which ones to pay attention to, which ones to totally ignore. Okay, which ones are trend following, which are counter trend as well. You might say, okay, this is counter trend. Bad news scenario, we might have maybe the yen trading lower It'd be a trend following scenario. What about deciding on the currency pair? Yeah, so you look at all that. Once you have, let's say for example, you have all this put in there, then now I'll be looking at this. Okay, bad news scenario. I've run out of space to draw my stuff. Okay, so say for example, let's say the euro dollar. Okay, so this is the Aussie here. This is the Aussie that we've just drawn here. Compared to the euro dollar, let's say that in a bad news scenario, it's going to bounce back up. It was trading down, and then now it's bouncing back up, right? But it might have found a support there. Resistance might be way up there. And then you look at this and go, between the Aussie and the euro, which one would I prefer? In a similar situation where it's bad news, we're likely to see both push to the upside, right? I would look at it and say, okay, Aussie would have to break a resistance immediately, and we could see once it breaks a resistance, we could see a big upward move. Compared to the euro, and I will have my stop loss nearby, right? Take profit up there. Compared to the euro, that it could trade up to that resistance, but at that point, my stop loss would have to be, quite wide. My take profit on the resistance would be maybe 1:1 compared to the Aussie dollar, which should have a better risk to reward. Then I'll rank it. Right? I'll start ranking which ones I want to pay attention to in terms of, okay, Aussie had better risk to reward. I'll look at that. Euro, maybe a bit later, or euro after the event. Now that we got a weaker, for example, now that we got a weaker US dollar, interest rate decisions to come from the euro next week, put it all together. It might not move now, but I'll wait for it to climb up, break above this resistance level, and then trade up. Right? So I have Aussie now on the news release, or as the news release, trade it up. After that, Aussie dollar by 9 o'clock on Friday night is not going to move too much. The next focus will be onto the euro dollar for that longer term move to the upside. All right, so I hope I answered a question there, Nick. No worries, Kegusi. Okay, so that's all I have there for you guys. I just wanted to keep it short and sharp. Again, please test it out first. See how it works on the different pairs and different charts, on the different news events. Please don't jump into a trade on Friday just going, all right, I just did a fundamental analysis session, and I start jumping into trades. Do test it out first. Do try and understand it. If you have any questions, reach out to me. Drop me a message on TradingView. I'll be happy to guide you through that further. Thank you, BL. With that said, we have come to the end of the session. If you haven't already, do me that huge favor, click that little rocket ship button, and also on YouTube, help me out, click that like, thumbs up button. It does help massively. And again, with all that said, please trade well, trade safe. Possibly not a lot of trades to be had today, so please trade carefully. And I'll see you tomorrow. Take care now. Bye-bye.